Watching First Business, financial news, analysis, and today's investment ideas.
Well, some critics are still sounding alarm bells about potential inflation getting out of control on the heels of the Federal Reserve embarking on a second round of easing the money supply. LouScatigna, financial planner, is here to talk about the fallout from the Fed's strategy. Welcome back, Louis.
Good to be here again.
Good to have you again. So you are of the opinion that the Fed has already lost control of its monetary policy?
Well, the Fed has already expanded their balance sheet by almost $2 trillion, and now they want to add another $600 billion to $900 billion to their balance sheet. The economy hasn't really improved. They have lost control of monetary policy.
Okay, so as a result of the Fed's strategy, then, asset prices are inflated from stocks to commodities. Now, who exactly is that benefiting?
People who hold those commodities and gold and silver, and ultimately housing is going to inflate as well. I think that'll be the benefit from inflation, but we're going to see tremendous amounts of inflation in food, energy. And again, we've seen it almost instantaneously after the Fed announced QE2. We saw gold prices go up $50 an ounce. We saw silver skyrocket. We saw the stock market inflate 200 and something points. We also saw oil at $87 a barrel. Oil is going to be $100 a barrel, in my opinion, by the end of the year, if not in early 2011. And I don't think we're going to see oil below $100 again. Okay,
going back to your comment about the housing market, do you really think the Fed's action will help inflate the housing market in the way that it is right now?
Not initially. It's going to take some time. I think 2 years out, we'll finally start seeing housing prices go up because it's a tangible asset. You can't print a house, you can't print land, and ultimately, once we work through these foreclosures, inflation is going to pull housing prices up as well.
Okay, but for the average American then, if we're all going to be paying more for food and energy prices, how exactly is that supposed to spur economic activity? You would think that it would hurt.
It will hurt. It's not going to help at all. What the Federal Reserve is doing now by printing $600 billion to $900 billion more dollars is just financing the federal deficit. It's the same amount of money that we have in federal deficit between now and the end of June that they're going to create and buy Treasury bonds with. Because they're the buyer of last resort. And foreigners now are very unhappy with the Fed's policy and may boycott our auctions.
Okay, so you're also of the opinion that we're going to be seeing pretty bad inflation. Now, inflation isn't that bad right now. I mean, when do you think it's going to hit us?
Well, it's not bad the way the government reports the CPI, which is fudged in my opinion. But we're seeing inflation, as I said, in food commodities and mostly in precious metals, which is the canary in the coal mine. Seeing gold go from 800 to 1400 in 2.5 years is telling us that there's already monetary inflation in the system. And ultimately, we're going to see just a few months out major increases at the retail stores.
And how bad could inflation get maybe 2 years from now?
30% a year.
Increase in prices.
That's real bad inflation, or even higher if we have a dreaded hyperinflationary event. And a hyperinflationary event is always a monetary event. It always happens when a central bank creates too much currency. It's happened many times before.
Okay, now if we're going to be seeing a scenario of higher inflation, do you think that could lead to economic stagnation? Because people are going to be spending a lot more money on food and energy and not a whole lot else on other things.
Yeah, I'm not very optimistic about the economy over the next 5 years. I think we're going to be looking at depressionary type economy over the next 4 or 5 years.
Or what about even stagflation?
Stagflation, you're going to have no growth. You may even have declining growth and rising prices at the same time. Times are going to get very tough for the average American.
Okay, what about the U.S. dollar? How much at risk is the U.S. dollar because of what the Federal Reserve has done?
It's at risk of losing its status as the world's reserve currency. Many foreign governments have come out and stated their displeasure with the Federal Reserve, namely China. It's been very critical of it. This week we have a G20 meeting. Behind the scenes, you're going to see a lot of heated discussion about what the United States is doing. They'll come out and they'll have a nice little communique at the end. But I'm telling you, around the world, foreign governments are very concerned about what's happening here.
And there's been lots of rumbling going on about a currency crisis. Now, how realistic is it, though?
Better than 50-50. I shouldn't say it. It's 100%. The question is, when is it going to happen? I think it's going to happen within the next 12 to 24 months, where there's a total loss of confidence in the U.S. dollar, and foreigners start selling their Treasury bonds and repatriating their capital home, which will cause interest rates to skyrocket. And the problem that the Federal Reserve has is they can't really battle inflation, because how could they raise interest rates? They're not like Paul Volcker did in 1980. We don't have that kind of economy that could withstand 15% interest rates.
Should Congress audit the Federal Reserve?
The answer is absolutely yes. They haven't been audited in such a long time. We don't know if the gold is in Fort Knox, they say that's there. Why not have the Federal Reserve audited? Why not have some transparency? The central bank has way too much power in this country, and with the change in Congress, I think it's going to happen.
All right, well, thank you very much for your thoughts on this. We appreciate it. LouScatigna, he's a financial planner.